Today we're diving into the topic that I know a lot of you are interested in: retiring early. And who better to learn from than the Oracle of Omaha himself, Warren Buffett? We're going to be taking a look at the top 10 assets that Warren Buffett loves, assets that he believes are better than holding on to cash, especially if you're trying to retire early. First up on our list are equities, better known as stocks. You'll often hear me saying that real estate is my favorite investment, but even I can't deny the power of stocks when it comes to building wealth. They are a cornerstone of Warren Buffett's investment strategy, and for a good reason. Stocks represent ownership in a company, and when you invest in a company that performs well, your investment grows in value. It's as simple as that. Plus, over the long term, stocks have consistently outperformed other asset classes like bonds or even real estate. Of course, I have to mention that the stock market can be volatile in the short term, but over the long term, it has always trended upward. Remember, guys, that time in the market beats timing the market. So if you're looking for a way to grow your wealth and potentially retire early, investing in stocks is a must. Warren Buffett himself has often emphasized the importance of patience and long-term thinking when it comes to investing in stocks. But consistently investing in quality companies and holding on to those investments, you can build a substantial nest egg over time. So don't be afraid to dive into the world of equities with the right approach. Stocks can be a powerful tool in your journey to retiring early. So next up, we have real estate, which is, in my opinion, one of the best investments you can make. And I know Warren Buffett agrees. Real estate is a tangible asset that provides both rental income and value appreciation. When you invest in real estate, you're essentially buying a piece of land and any structures on it. This could be anything from a single-family home to a sprawling apartment complex. And the best part is you can benefit from both the income it generates and the potential for its value to increase over time. One of the biggest advantages of real estate is that it's relatively low risk investment compared to stocks. Of course, there are risks associated with any investment, but the real estate tends to be less volatile than the stock market. Plus, real estate is a great hedge against inflation. As the cost of living goes up, so do rental properties' values, which means your investment is protected from losing its purchasing power. Additionally, real estate offers tax benefits that can enhance your overall returns. For instance, you can deduct mortgage interest, property taxes, and even depreciation on your rental properties. This can significantly reduce your taxable income and increase your cash flow. Moreover, real estate allows for leverage, meaning you can use borrowed money to increase the potential return on your investment by putting down a small percentage of the property's value. You can control a much larger asset and amplify your gains. In summary, real estate is a versatile and powerful asset that can provide steady income, appreciation, and tax advantages, making an excellent choice for those looking to retire early. Another key benefit of real estate is the ability to diversify your investment portfolio by including real estate in your portfolio. You can spread out your risk and reduce the impact of market fluctuations on your overall wealth. Whether you choose residential, commercial, or industrial properties, each type of real estate offers unique opportunities and benefits. This diversity allows you to tailor your investments to your specific financial goals and risk tolerance. Finally, real estate can also provide a sense of security and stability. Unlike other investments that can be highly volatile, real estate tends to hold its value over time, providing a reliable source of income and long-term growth. So if you're looking for a solid investment that can help you retire early, real estate is definitely worth considering. You know, Warren Buffett often talks about businesses like they're simple, easy to understand operations, like a bakery, for example. It's a cash flow machine, right? People love bread. It's a staple. You're generating consistent income and there's always room to grow. That's the beauty of owning productive businesses. Think of companies that produce essential goods and services, things people rely on day in, day out, whether it's software, food, or healthcare. These businesses cater to consistent demand. Now, I'm not saying you need to go out and buy a bakery or a tech startup tomorrow, But understanding this principle is key. Investing in companies that produce tangible value is a core part of Buffett's strategy, and it's something we can all learn from. Look for well-managed companies with a solid track record and a strong competitive advantage. These businesses are like well-oiled machines, churning out profits and building long-term wealth. Like tech companies, for instance. They innovate and create products that become essential in our daily lives. For healthcare companies that provide critical services and products enduring a steady demand. Retail stores that are well managed and cater to customers' needs can also be incredibly profitable. Diversifying your investments across various productive businesses can help mitigate risks and maximize returns. The key is to identify businesses with growth potential and strong market presence. Consulting with a financial advisor can also help you make informed decisions about investing in productive businesses. Remember, investing in productive businesses is a long-term strategy that can lead to financial independence and early retirement. All right, let's talk about bonds. I know they might not sound as exciting as, say, investing in a tech unicorn, but trust me, bonds are like a reliable workhorse of your investment portfolio. Think of bonds as loans you give a government or corporation. In return, they promise to pay you back the principal plus interest over a set period. It's like a steady paycheck, providing a consistent income stream. Now, why are bonds so important, especially for early retirement? Well, they add stability to your portfolio. When the stock market throws a tantrum and takes a nosedive, bonds tend to be less affected. They act as a buffer, smoothing out the ride and reducing overall volatility. Remember, early retirement is a marathon, not a sprint. You need a portfolio that can weather the storms and keep generating income, even when times are tough. Bonds help you do just that, providing a sense of calm amidst the market chaos. One strategy is to consider a bond ladder where you invest in bonds with different maturities. This way you can reinvest the returns and maximize your income over time. Including bonds in your portfolio ensures long-term financial security and peace of mind. Warren Buffett advocates for simplicity investing, saying index funds are the best way to build wealth. They're the ultimate set it and forget it strategy. Index funds track a market index like the S&P 500. You're buying a piece of the entire market, which diversifies your risk. Plus, they have lower fees, meaning more money stays in your pocket. Every dollar saved on fees can grow your wealth over time. This can lead to significant growth in your retirement savings. The power of compounding returns make an index funds a smart choice for long-term investors. Follow Buffett's advice and let index funds work for you. Now we're diving into an asset class that is as old as time itself, agricultural land. Buffett's a big believer in the long game and farmland. Well, that's about as long-term as it gets. This is land that produces the food we eat, the clothes we wear, essential stuff. And guess what? People always need to eat, no matter what's happening with the stock market. This consistent demand makes farmland a surprisingly stable investment, even when other assets are going haywire. Plus, you've got the potential for some serious appreciation. As population grows and usable land becomes scarcer, the dirt starts to look more like gold. And don't forget about the income potential. You can lease out your land to farmers and generate a steady stream of passive income. Whether it's a cornfield in Iowa or a vineyard in Napa, agricultural land can be a solid addition to diversify your portfolio, providing a hedge against inflation and connection to something tangible. Plus, with advancements in technology, farming is becoming more efficient and profitable. Some farms are even integrating renewable energy like solar or wind power to diversify their income streams. This blend of tradition and innovation makes agricultural land a compelling investment for the future. Inflation erodes your purchasing power over time. It's like a slow tire leak, unnoticed at first but problematic eventually. Warren Buffett knows the danger of inflation. He favors assets that preserve capital and outpace rising prices. Enter Treasury Inflation Protection Securities, or TIPS. TIPS are U.S. Treasury bonds with inflation adjustment principle. If inflation rises, TIPS value increases. This protects your purchasing power during economic uncertainties. TIPS are a long-term strategy. They are a valuable tool against inflation. Buffett endorses TIPS for their reliability, including TIPS in a diversified portfolio can enhance stability. Historically, tips have performed well during inflationary periods. They act as a hedge, providing financial security.